Now back to Inside Real Estate. Here's Mike the Realtor.
Hey folks, we are back. InsideRealEstateRadio.com is the website. InsideRealEstateRadio.com is the website. Time to do a little business talk. We're going to be talking to our good friend over at Goosehead Insurance, Richard Tonihka. His website, richardtagency.com. richardtagency.com is his website for all your insurance needs, home, auto, and otherwise. By the way, don't forget Goosehead and Richard. They are the only brand, only model that can shop over 20-25 companies behind the scenes to get you the best rate, the best policy. And by the way, they can bundle different companies. You can't go to Allstate, to State Farm, to Farmers, or any other big box and have them bundle from different companies. Doesn't happen. Richard can do that for you, getting you the right policies for you, your needs at the right price. Richard, what's going on?
Hey, how are you doing today?
Excellent.
Oh, fantastic. Okay. Well, I wanted to talk to you today about deductibles. And I know all of us know that deductibles play a role in our insurance and how much it's going to pay, how much it's going to cost us, and how much we're going to have to pay out when we have a claim. Not if we have a claim, but when we have a claim. And so, trying to talk to you about the different types of deductibles, as well as how you're setting up, how we're calculating what those deductibles are going to be taken from. So the first thing is, of course, deductibles. There are two types. There are set amounts, and there is a percentage. Most of the time, actually in the early 90s, it started becoming more common for everyone to start using a percentage. And normally the percentage that you're going to see is 1 to 5% on the dwelling value. And your dwelling value is going to be different from carrier to carrier, because when you're going in and we're looking at your individual house or the house that you're going to purchase, we are looking at what kind of bathrooms do you have? Do you have builder grade? Do you have semi-custom? Do you have custom? Do you have luxury? What kind of flooring do you have in your house? Do you have tile? Do you have hardwood? Do you have carpet? And what kind of percentage? Do you have crown molding? We're looking at all of that stuff. And to make sure that when you have when we're setting up your house and we're setting up the dwelling value of your house, that we have the right amount in there. So let's say you have a claim and I went in and absolutely just got you the cheapest or least expensive dwelling value I could find. You've got a custom home, but I went in there and I said that you had builder grade material for your bathrooms and your kitchen. When you have a claim, let's say you had a pipe burst in your bathroom, destroyed the whole bathroom, comes in, we look at your policy and say, the insurance is going to go, oh, you have builder grade stuff in your house, and this is what you agreed to. And you as a consumer have to know what you're signing and what you're agreeing to.
Right.
So when they come in, they're not going to put the stuff that was in there originally, because your agent ended up putting in that you had builder grade stuff. So they're going to put builder grade stuff into the bathroom.
Yeah. So what happens, and you say this all the time, you say when, insurance agents, they know that you're shopping by price, and they do this on you, and you don't find out until you need to make a claim.
Exactly. And that's the wrong time to find out about anything.
Yeah.
Is after the fact. That's the reason I walk through on making sure that what kind of amenities do you have in your house? What are you paying for? Now, if all you're looking for is that your dwelling value is over your loan amount, which is what some people want, because like I always say, we all have different risks. And so what your risk is going to be different from mine. And if all you care about is having that your dwelling value above your loan amount, so if you have a total loss that it pays off the loan and you've got a little bit extra to go find another house, then fine. That's what we do. It's up to you. But as an agent, I am supposed to go in there, and I do go in there to make sure that I've got it set up correctly for you and your family.
Right.
So, anyway.
Yeah, and it's, folks, you need to understand that if you do have, obviously you want to pay the least amount that you can pay every month. But at the same time, how do you balance that with being covered? I mean, one thing you don't want to do is chintz out and have, like you say, put in lower end things. When it comes time to replace, you're going to get That's what you're going to get.
You're going to get lower grade stuff put back in.
Yeah.
So out of those two things, the set amount and doing it as a percentage. Let's just take a nice round number of a $200,000 house. We've gone in, we made sure that the replacement cost is correct. Everything comes out. Your home is $200,000 as far as the replacement cost for the insurance is concerned. We give you a 1% deductible. So that means if you have a claim or something comes up, you are going to pay out of pocket $2,000 if you have a 1% deductible on your house, if you have 1%, and making for any claim, whether it wind and hail or anything inside the house. So going in, making sure that is $2,000 enough for you, or is it low enough, or do you want more? Because on a personal level, a claim has to be double what my deductible is. So that $2,000 that I would have for this particular claim, let's just say a water claim, it would have to be $4,000 before I'm going to come out of pocket. If it's $2,500, I'm basically putting a claim on my record for $500.
Right.
It's not enough. I mean, we all have a budget that we have to stay in, and we all have reserves, or hopefully we all have reserves that we're looking at. And so my magic number is twice my deductible, and I always keep my deductible at 1% just because I don't want that rate to be too high where it just makes it where I'm never going to put a claim in to begin with.
Right, exactly.
And so that if you have that 1%, or you even move up to 2%, now you're looking at moving from 1% to 2%, you're going to save a few $100s on your on your premium.
Mm-hmm.
But if you have a claim, now you're looking at $4,000 rather than the $2,000 you would have had with the 1%. And they even go up to 5% in some cases, which to me is absolutely ludicrous, but it's for somebody that doesn't care about anything except for a total loss. Mm-hmm. So you're looking at $10,000 in that instance. So is that something that you want to think about to try and get your premium down? Who knows? Then the other one is the set amount. Normally it ranges anywhere from $1,000 up to $5,000. And so we're going to take that same example of the $200,000 house. You have a set amount of $1,000. So now you're looking at saving $1,000 on your out-of-pocket expense in a claim. Does that mean that your rate's going to go up dramatically? Maybe, maybe not. I doubt it. I mean, we never know until we go in and start running the numbers. But even if you went up to $2,500, that's a 1.5%. That may be a better option for you than paying the 1% or the 2%, because neither one of those actually fit your budget.
Right.
So when we're looking at this, how should you choose your deductible? It's going to be on a case-by-case basis, and we never really know because not all the options are there for every carrier. Some carriers strictly do it by a percentage. Some offer you the set amount and the percentages, but you never really know.
Yeah, the important thing to recognize, folks, is that when you're going to a big box and trying to shop around, and if you say, hey, you want to talk about your deductible, they don't want to talk about your deductible. They're just going to be like 2%, bottom line. Whereas if they come to you, you've got options because of all the companies that you work with. You've got options to talk about. Maybe a set deductible is the way to go for them. Different options for different people.
Absolutely.
But when they go to a big box, they're not going to get options really. So going to you with the 20-25 companies you can shop behind the scenes, you've got those options.
Not only do we have the options with with all of our different carriers, but also the different deductibles and everything else that we can offer you. It's just a no-brainer to let us shop you with over 20-25 different carriers.
Yeah, absolutely.
And if I can make a pitch, an agent within my agency, Julie Wells, will be in Farmers Branch March 5th from 6:30 to 8:30, 2435 Squire Place, Farmers Branch, March 5th from 6:30 to 8:30. Go visit her and ask her about insurance.
There you go. And folks, don't forget, hey, RichardTAgency.com is the website for all of your insurance needs, home, auto, toys, otherwise, motorcycle, RV, whatever you got, and life. RichardTAgency.com. Talk to Richard. Give him a call, and he's going to take care of you. See you in a few.